Welcome back to Roxham TV. I'm your host, Jeremy. We've got another packed show today because honestly, a lot of the biggest stories in the world right now are all well connected. We are talking about geopolitics, oil, crypto, tech, and even your daily life, all moving together at the same time. And today, we're going to break all of that down in a simple kind of way so you're going to actually understand not just what is happening, but why it matters. We'll start with the biggest macro story driving markets right now. So we have the US and Iran agreeing to a temporary 2-week ceasefire. On the surface, that sounds like a very positive headline, of course, but when you actually dig deeper, both sides are telling very different versions of the same deal. The US says Iran agreed to open the Strait of Hormuz. Iran says the US is the one accepting Iranian conditions. So this is not a clean peace deal for sure. This is a very fragile pause, and that matters because the Strait of Hormuz is one of the most important oil choke points in the world. If it stays open, oil pressure eases. If it closes again, markets could panic very quickly. And that's why we saw such a big reaction overnight across not only stocks, but oil price and also, of course, crypto price. And that brings us straight into the second story because right after this ceasefire headline, Bitcoin surged back above 72,000. Ethereum at the same time also jumped and crypto markets exploded higher. But this is the key question we're going to explore today. Is this the start of a real recovery, or is this just a relief rally driven by geopolitics? We'll break down what's really happening beneath the surface, why hundreds of millions of dollars in short positions got wiped out, why institutions are starting to step back in, and why the next move in Bitcoin may have less to do with crypto fundamentals and more to do with what happens next between the US and Iran. Then we're going to bring the story back to something everyone can feel directly in your life, which is travel costs. If you've checked flight prices recently, you've probably noticed tickets are getting really expensive, and some flights are starting to even disappear. That's not random. That's not just airlines being greedy as they always do. That is directly linked to the war and the disruption in energy markets. Jet fuel prices have surged, supply is getting tighter, and airlines are already cutting routes and raising fees. So we break down why your next flight may cost more, why this is hitting Asia and Europe specifically hard, and why even a temporary ceasefire may not be enough to bring real relief yet. After that, we move into tech. Apple stock dropped because of growing concerns around its foldable iPhone. And that may sound like a niche product story, but it actually matters much more than that because Apple has built its reputation on launching polished, category defining devices. So if the foldable iPhone is delayed, investors are going to ask a much bigger question. Is Apple still leading the next wave of innovation, or is it starting to fall behind competitors like Samsung, like Huawei, in one of the few major smartphone categories left to unlock? Then we'll go back to crypto because Polymarket just announced its biggest upgrade ever. This is a full rebuild of the platform, including a faster trading engine, a redesigned order system, and a new native stablecoin. That tells you something important. Prediction markets are becoming one of the most competitive areas in crypto right now. And this is not just about betting on politics, betting on sports. This is about who controls one of the fastest growing intersections between trading, between information, and real world events. And if Polymarket is making this move right now, it's because the competition is getting serious. We are also covering a very important macro crypto story that most people are probably missing. Russia is trying to rebuild a crypto-based cross-border payment network to bypass Western sanctions. And even if adoption still looks limited for now, the bigger trend is what really matters. More countries are starting to ask what happens if they get cut off from the dollar system. And that means more experiments with alternative rails, alternative currencies, and now crypto based financial infrastructure. So we'll break down what's real, what's just political messaging, and what this says about the future of global money. And finally, we're going to talk about one of the most common mainstream attacks on Bitcoin yet again. I know this is not new, but it's recycling the news. That's the public what the public like to do. So, economist Steve Keen went on a huge podcast and said he believes Bitcoin is going to zero because of energy use. Now, this matters because millions of people are still hearing this same old argument. So, we're going to break down why that argument misses the point, why Bitcoin's energy use is actually tied directly to its security, and why understanding the difference between energy consumption and energy value is one of the biggest narrative edges you can have as Bitcoin investor right now. So today's shows really comes down to one big theme. Markets are not moving in isolation. Crypto is not moving in isolation, and so is tech. Everything is well connected through energy, geopolitics, and the fight over control of the financial system. So stay with me all the way through because by the end of the show, all of these stories are making a lot more sense and start coming together. So without further ado, let's dive into the first story of today, and we have to get it out of the air, which is the headline that we've been seeing in all social media and all traditional media. So, the U.S. and Iran have agreed to a 2-week ceasefire. Donald Trump announced it first, saying both sides will pause attacks immediately. At the same time, Iran also confirmed the ceasefire, but here's where things get interesting. Both sides are telling very different versions of the same deal. So, from the US side, the message is quite simple. So, Donald Trump said Iran agreed to open the Strait of Hormuz, and in return, the US will stop military attacks for 2 weeks. So, from Washington's view, this looks like progress toward peace, a step toward reopening global oil supply. But from the Iran side of things, the story is very different. Iran says the US is one accepting their conditions. Those conditions include lifting sanctions, include compensation and also security guarantees, and even pushing for international approval through the United Nations. So, in other words, both sides are claiming they are winning. And that tells you something very important. This is clearly not a clean agreement. This is a very fragile agreement because when both sides describe the same deal differently, it means the details are not fully agreed, and that creates uncertainty going forward. Now, let's zoom out and understand why this happened because despite the tension, both sides actually have reasons to pause, I would say. So for US, the priority is quite clear, like lower oil prices and stabilize global markets. For Iran, the priority is also quite clear, is to protect its economy and avoid further damage. And both sides want one thing for sure, which is control over Strait of Hormuz, because this is the most important oil choke point in the world. So even without trust, they can still share the same fear. Now, here's the key point you need to understand. The entire deal is really about one thing, which is oil. Like both sides are signaling they are willing to allow shipping again on Strait of Hormuz, but under different conditions. What the US want is that they want free and open access. However, Iran wants control and leverage. So the question is not just, is there a ceasefire? The real question is, who controls the trade moving forward. Now, another key development here is the role of Pakistan, actually. So Pakistan here acted as the mediator in this deal, and future negotiations are also expected to happen in the capital of Pakistan. That tells you this is no longer just US versus Iran issue. This is becoming very global, and we could see more countries getting involved in shaping the final outcome. So if we connect this back to the market, because like everything is somehow moving, so markets don't need perfect, I'll say perfect clarity. They just need less uncertainty. And right now, if you take a look at S&P 500, like this ceasefire is really giving markets some breathing room. It reduces the risk of immediate escalation. It reduces the risk of oil supply shock, and it brings back some sort of confidence in the market. That's why we are seeing stock market is up. So S&P is finally recovering. So after, I would say, like we drew this pattern perfectly well like months ago, and after that, if we lose that level of support, we drop uh, almost 10% from the top. I mean, this is quite severe for S&P 500, but ever since that, so from a bottom of 6,300 points. That was a quite generous pump. So over the course of like 9 days, we pumped 4.7% for S&P 500. So this is another immediate reaction by the market for this like kind of positive news. And oil price at the same time is down quite significantly, because at one point we were reaching $120 per barrel. And for crude oil right now sitting at $94. Of course, we have to take a look at Brent oil as well. So Brent oil is coming down a little bit, and that makes sense because like there's a ceasefire for 2 weeks. So there you go. So from over $110 per barrel, right now sitting at $94.71 per barrel. And crypto is also rallying. Now, that sounds great. That sounds very promising. But here's the reality check. This situation is getting very fragile. Iran only agreed to stop if attacks stop. The US only agreed under certain conditions, and both sides still have very different expectations. So this could break down at any moment. So going forward, there are actually three things we have to watch closely. First, does the Strait of Hormuz actually reopen in a stable way? Second, do real negotiations begin in Pakistan? And third, does military activity stay paused? Because those will tell us if this is real progress or just a temporary pause. So if we, for the bigger picture, if we step back and look at the big picture, like this is not a peace. This is negotiation under pressure. Both sides pushed to the edge, and now they are stepping back just enough to avoid going too far. So yes, of course, this is a ceasefire, but no, there is no clear agreement yet. Both sides are claiming victory, which usually means the real deal is still being negotiated. Markets are reacting to relief, but the uncertainty is definitely still there. So speaking of the market, of course, we have to hop to Bitcoin. So right after the announcement of ceasefire, the markets loved it, and including Bitcoin and crypto. So Bitcoin surged above 72,000. At one point, it even touched around like 2 hours ago, 73,000. That's more than 5% move in just 24 hours. Ethereum also jumped above 2,200, and most major altcoins followed higher. So this is actually not a small bounce. This is a strong reaction. So we quickly hop onto CoinGecko. So for the past 24 hours, you see the crypto market cap. It rose 4.1% in just only 24 hours, which is quite good. And if we scroll down to the list, In the past 24 hours, you can see most of the coins are in green. It's just like some of the rubbish coin. I don't know what they're doing, like Tron, for example. Tron is a special case because it always deviate from the market. So there are, of course, few exceptions, but generally speaking, the market is on a very joyful rally right now. And now, here's what really drove the speed of this move. Over the past 24 hours, nearly $600 million in positions got wiped out. And most of that was short positions. That means traders betting on the market going down got forced out. So if we take a look at 24-hour, money got racked. $604 million got racked, and most of that is coming from short. And if we take a look at 12-hour, same thing happened. Same for 4-hour getting wrecked, and same for 1 hour getting wrecked. So there are some of these like altcoins, smaller altcoins specifically speaking, they had a huge pump. So that's why it kind of like forced out all the traders. So more than 110,000 traders were liquidated in just one day. So this rally was not slow money coming in. It was very fast. So a lot of forced buying, in other words speaking. But let me say this again. Markets are not reacting to peace. They are reacting to less fear. The ceasefire reduces the risk of escalation. It reduces the risk of an oil shock, and it gives markets some breathing room. And when fear goes down, risk assets go up. That includes crypto, of course. But this is where you need to be very, very careful whether it is really indeed just a relief rally. All right, so speaking of Bitcoin, let's hop onto the Bitcoin chart and give you guys a quick update. So right now we're sitting at 71.6K. And as I mentioned, this like bear flag, we actually called that out months ago. And I know it has been a very joyful rally, but like zooming out, I was doing the TA almost every single day here on Roxham TV. And zooming out, we are just bouncing in and out of this like important level support and resistance. So actually going nowhere, but I understand why people would be joyful, some hopium in the market finally, because we have been down so significantly. So question people like to ask, how long this relief rally going to carry on? Like how bullish is this momentum? So like what I've got here is the bear flag. And for those of you guys who don't know what a bear flag is, like there you go. This is a bull flag, which is a bullish pattern, as the name suggests. On the right side, that is a bear flag, which is awfully similar to the price action that Bitcoin is experiencing in today's world. So basically a bear flag, of course, a bearish pattern. So how do you read this is like, as long as we hold this level of support, like whenever we go to the top and then we go down, as long as the daily candle close above this level of support, then the bullish momentum is still in control. Another thing we could spot for the early signal whether this bullish trend going to continue is on the daily RSI. So daily RSI, whenever we come close to the level support, there is huge buying pressure. So in order to hold the support, we bounce off from that this line of support rather well. However, if there are like 2 or 3 daily candles closing below this level of support, and same for the price action, if we have 2 or 3 candles closing below, that means this bullish momentum is officially gone, and we are entering another phase of the bear market, which is to go down. But like that being said, like as long as we hold above here, I do think that is we're gonna rise higher. However, if we hop onto the weekly candle, this would further suggest that it's just another stage of the bear market, like we are not out of the wood whatsoever. The reason why I will say this is like on the weekly chart, if we just take the point of resistance and line them up, you see that we are reaching the edge of the resistance. We haven't even touched that yet. So I have no idea why people are calling this, okay, bull run has officially begun. And there is an interesting meme that I saw. So when we had a top of 126K and we dropped to 60K as a low, so that was like 52% reduction. Like I saw the bulls on Twitter, they're still calling, oh, this is a minor correction, like a minor volatility that Bitcoin would experience in terms of like a Bitcoin history. I mean, and then when we have this little pump, so pumped to like $75,000. They were like, see, I told you the bull run is still in control. But even if we take the top to where we are right now, it's still a 43% reduction, a correction. So I don't know what these people on about. But point being, like looking from daily and also weekly, there's huge resistance. So for the weekly, we seem very close. We haven't even touched the edge yet. So there could be a case we even rally above. So right now it's sitting at 74.5K, somewhere around that. Of course, we still haven't closed this weekly candle. Today is just Wednesday, so there are a few more days for us to see the confirmation. But like even if we rally up, I have a difficult time believing that this weekly candle will close above this resistance line. So this is where I'm watching, but like 74K is a huge resistance, and this happened to align with the daily candle as well. Again, like we have the bear flag here. Whenever we go to the important resistance level, we just get rejected and bounce inside this bear flag. And this is what I call a kangaroo market. We're just bouncing off and consolidating a little bit. And not only this, I have drawn this region. So this region between 77K to 80K, this is the level of support and resistance. The reason why I've drawn this is because like whenever we dropped to this region, this rectangle that I drew months ago, we didn't spend much time trading inside this region. It's kind of like a free trading range in a way. So like in other words, there's huge resistance. Like if we there's a possibility that we could rally based on the weekly, like 74K is a huge resistance, but we can absolutely, like as I mentioned, like having an edge wicking above this trend, but like closing above this downward trend is another theory that I don't see much conviction. But like we could absolutely rally to the top of this bear flag. But like in terms of like having a few daily candles staying inside this rectangle, like we will take it from there. But right now, the possibility to me looks rather slim. But of course, like for TA, we're just calculating probability. When we have new information, of course, the first thing we show is on the chart. So maybe also align, because like TA, it kind of like, it just focus on the chart patterns. And one thing I find it mesmerizing is like a lot of world event will be fully reflected on the charts. So like there are some TA traders would only look at charts, would only look at TA and absolutely don't care about geopolitics, about the news, fundamentals at all. But like here, we like to incorporate everything. All right, so that was a quick update for the Bitcoin's price. But there is a bit of mixed signal here. Like we are seeing capital slowly returning to crypto. So if we hop onto the Bitcoin spot ETF net inflow, like the chart we have got here, like you'll see like the digital asset funds slowly creeping in to the Bitcoin market again. So there are some inflows flowing into Bitcoin and Ethereum. So both Bitcoin and Ethereum ETFs are seeing stronger demand yet again. That means like institutions are slowly stepping in, and that gives the market some hopium. The reason why we're looking at ETF, because like most of the people trade ETF, they are the big guys, like they're the institutions. So when big guys move, that is a higher probability that will move the market, move the actual price of Bitcoin and Ethereum. So what we have seen also is that other big players continue to accumulate. The first one we have talked about is MicroStrategy, of course, MSTR. MSTR is still buying Bitcoin aggressively, adding thousands of Bitcoin even during the dip. So if we focus on the top line, so being the orange line at the top, so that means the Bitcoin holding on MicroStrategy balance sheet keeps going up. So Ethereum treasury companies are also building positions while retail is feeling uncertain. Smart money is actually positioning long term. But now let's not don't ignore what's really happening under the surface. A lot of short-term holders are still in loss. Many bought at higher prices. So that means if the market drops again, we could see panic selling, and that can create even more volatility. So if we step back and look at this clearly, this is not a clean recovery yet. This is more like a relief rally. The market was positioned for bad news. And when things got slightly better, it snaps back fast. So the real question going forward is simple. Does this ceasefire actually hold? Because if it does, markets don't continue stabilizing and crypto could move higher. But if the tensions come back, everything can reverse very quickly. Bottom line is, if we go to a Bitcoin chart again, of course, Bitcoin holding around 72K looks strong, but this move is driven by geopolitics, not fundamentals. The ceasefire gives markets some breathing room, but the risk is still here. And right now, crypto is trading on headlines. So the next move in Bitcoin may not come from crypto itself. It may come from what happens next between the US and Iran. All right, so we will take a short break from here. When we come back, we are diving to more impact that would actually affect your day-to-day life. We are talking about the impact of the war, for example, like your next flight if you're planning to travel to another country. Your flight tickets might get really expensive. So that is directly linked to the war and directly related to you. So don't go away. We'll be right back after the break.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
Oh, I forgot to mention, dividends on Roxum are paid in Bitcoin. Stretch your income, 11.5% paid in Bitcoin.
Stretch your income to 11.5, get 11.5 in Bitcoin and Roxum. 11.5%. 11.5%.
Welcome back to Roxum TV, and thanks for sticking around with us after the break. Now, let's start with something everyone is watching and can relate to right now. If you have checked flight prices recently, you probably noticed something. Tickets are getting really expensive, and some flights are starting to even disappear. That's not random, and it's not just inflation. It is directly linked to the war in the Middle East. So, since the war and Israel launched strikes on Iran, jet fuel prices have surged. In US alone, jet fuels have almost doubled. It went from around $2.50 per gallon to nearly $5. And in other regions like Europe and Asia, the situation is even worse. Like the reason why is because the Strait of Hormuz has been disrupted, and this is one of the most important energy routes in the whole world. Now, here's the key issue. It's not just about fuel getting more expensive. It's about whether there is enough fuel at all. Airlines are now worried about the about actual shortages, especially for international routes, because planes don't just use fuel from another country, from one country. They actually need supply at multiple locations around the world. And now we are seeing real changes. Airlines are cutting flights, especially long distance international flights. United Airlines has already warned it may reduce routes to Asia, and executives are openly saying more cuts could come because at some point, flying just becomes too expensive. Now, let's connect this back to you. Fuel is one of the biggest costs for airlines. So when fuel prices spike like this, airlines have only a few options. So they could raise ticket prices, they could add extra fees, and they could cut flights. And right now, they're doing all three. You are already seeing higher baggage fees, higher ticket prices, and fewer flight options. Now, here's where it connects back to the ceasefire we just discussed. The US and Iran agreeing to pause the conflict has helped ease some pressure because it gives some hopium that oil supply could stabilize. And that's why oil prices has dropped so significantly. But here's the key point. This is only a temporary pause. So airlines are not assuming the problem is solved, they are planning for the worst. In fact, some airline executives are preparing for oil prices to stay high for years. Executives at United Airlines have already said oil could stay above $100 per barrel through 2027. And if that happens, this is not a short term problem. This becomes a structural shift in travel costs. Now, the impact is it's not the same everywhere. So Asia and Europe are actually more exposed because they rely more heavily on Middle East energy. So airlines in those regions face higher risk of shortages, and that's why you're seeing more aggressive cuts in international flights. Now, here's the interesting part. Travel demand is still very strong because people still want to have fun, they still want to fly. But if prices keep rising, that could change very quickly because at some point, consumers might want to pull back. Some step back. So like if we step back and look at what's really happening here, this is not just an airline story. This is I would say, the bigger global energy story. A war in one region is now directly affecting your travel plans, your ticket prices, and even whether flights are available at all. So the bottom line for this news, like this ceasefire gives some short-term relief for sure, but the risk is definitely still here. And if tension rises again, travel could become even more expensive and even more limited. And that's why this story matters to everyone watching right now. All right, so speaking of what matter, let's also hop on to Apple because the stock just took a hit and the reason might actually surprise you. Apple shares fell around 2%. At one point were down as much as 5% during the day after reports suggested delays in its first foldable iPhone. This is a product that investors have been longing for, and now there are signs that it might not be ready on time. So, according to reports, Apple is facing engineering challenges with the foldable designs, and the current solutions are not fully solving those problems yet. Sources say the company is working under pressure to meet deadlines, but may need more time to get the product right before mass production. This is important because Apple has built a reputation on very polished and high quality product and is known for delaying launches rather than releasing something unfinished. So now this is a big deal because this would be Apple's first foldable iPhone entering a market that competitors have been in for years. Companies like Samsung and Huawei, they had the foldable phone since 2019. So Apple is already behind this category. But like when it comes to foldable phone, here's what it looks like. So there's still the crease in the middle, which I'm not a big fan of. That's why I'm sticking with the regular iPhone. So let's see if the new innovation from Apple gonna solve this problem entirely. So what investors were expecting Apple is to finally catch up and possibly redefine the market the same way it has done with past products. The foldable iPhone was expected to launch alongside the iPhone 18 in September 2026 this year. So any delay would raise concerns about Apple's ability to deliver its next big innovation cycle. Now, here's where it gets messy. One report said delays are likely because of these engineering issues, while another report suggests the launch is still on track for September. So the market is reacting to uncertainty, not a confirmed delay. And that alone is definitely enough to move the stock price. So if we take a look at the past 3 months, it's down quite significantly. It's not helping if we're zooming out to the past 6 months for Apple. And now remember, like the iPhone is still Apple's core business. It accounts for more than half of the company's total revenue. So when there is uncertainty around the next major iPhone product, investors pay very close attention because Apple's growth depends heavily on keeping that product cycle strong and exciting. Reports say the next few weeks are crucial for Apple to resolve these technical issues before production begins. If the company cannot fix the design challenges in time, that could push back manufacturing, which could directly impact launch timing and sales. So, if we step back and look at what this really means, this is not just about one phone. This is about Apple's next phase of innovation. The smartphone market is already very mature and the growth is slowing down. So, new product categories like foldable iPhone are key to keeping the momentum going. If Apple enters late or struggles to deliver, it risks losing ground to competitors that are already ahead in this space. So the bottom line is like the Apple stock is reacting to uncertainty around its first foldable iPhone. Engineering challenges may delay the product, but nothing is confirmed yet. Investors are watching closely because the iPhone drives the majority of Apple's revenue, and this product could shape its next growth cycle. So the question is simple: can Apple deliver on time, or is this next big project about to be delayed yet again? And that's exactly what the market is watching out right now. All right, so we'll take a short break from here. When we come back, we are diving our toes into crypto. So there are more exciting news to come. We're talking about Polymarket's biggest upgrade ever. And this does matter because, especially for a TradFi or institutions getting into crypto, and it matters for the future of trading. So do stay with us after the break.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
Oh, I forgot to mention, dividends on Roxome are paid in Bitcoin. Stretch your income, 11.5% paid in Bitcoin.
Stretch your income to 11.5, get 11.5 in Bitcoin and Roxum. 11.5%. 11.5%.
Welcome back to Roxham TV, and thanks for sticking around with us after the break. So now let's hop on to Polymarket, because there is a big move happening quietly in crypto right now. So Polymarket, of course, the world's largest on-chain prediction market, they just announced its biggest upgrade ever. And this is not just a small update. This is a full rebuild on of the platform from the ground up. They are upgrading the entire trading engine, redesigning how orders work, and even launching their own native stablecoin. All of this is expected to roll out in the next 2 to 3 weeks. Now, the reason behind this is simple. Competition is really heating up fast. Polymarket is no longer the only player in this space. So we now have the traditional players like Kalshi and even big crypto platforms like Coinbase and Crypto.com moving into prediction markets. Even sports betting giants like DraftKings are entering this space. So Polymarket, what they need to do is to move fast and to have cheap and more efficient ways if it wants to stay ahead of this trend. Now, let's break down what they are actually changing. So the biggest upgrade is called the CTF Exchange V2. This is the new core system that powers all trading on the platform. With this new system, traders will have will be faster to process, a trade will be faster to process and cheaper to execute, because the number of steps needed to match orders is being reduced. That means lower fees and smoother trading for users. They are also simplifying how orders are structured, removing unnecessary data to make everything more efficient. So for users, the experience should feel faster, cleaner, and of course cheaper. Now, here's something important. Polymarket, what they do here is actually they're using a hybrid system. So it combines an off-chain order book with on-chain settlement. So you get the speed of centralized exchange, but you still keep the security of blockchain execution. This is a model we are seeing more and more in crypto, like trying to balance speed and also decentralization. Now, during this upgrade, there will be some disruption. So all existing order books will be cleared and the platform will go offline briefly for maintenance. So users, if you are trading on Polymarket, you guys need to be aware of the transition period. Now, one of the biggest changes I will say for Polymarket is the introduction of a new stablecoin. So Polymarket is launching its own token called Polymarket USD. This will replace the current USDC.E used on the platform. And here's why it matters, because USDC.E is a bridge version of USDC, not the native one issued by Circle, and that creates some trust concern for users. So what Polymarket is doing here is that they're trying to move to a cleaner system where its new stablecoin is fully backed one-to-one by the real USDC. For most users, this conversion will happen automatically, but more advanced users may need to manually convert their assets. Another key upgrade is support for smart contract wallets. This uses a standard called EIP 1271, which allows multi-signature wallets to interact directly with the platform. This is especially important for institutions and advanced users because it makes trading more flexible and secure. So if we step back and combine all the upgrades coming from Polymarket, like they are not just upgrading its product, it's preparing for a much bigger fight, I would say. Prediction markets are becoming one of the most competitive areas in crypto because they sit at the intersection of trading, of information and speculation. And whoever controls that market controls how people price real world events. There are also reports that Polymarket is raising new funding with a valuation approaching $20 billion. That tells you how big investors think this space can become. So the bottom line is Polymarket is rebuilding its entire system to stay competitive. So we're talking about faster trades, lower fees, and a native stablecoin are all part of that plan. But the real story is bigger than just one platform. This is about the next phase of crypto, where trading, betting, and real world events all merged into one system. And the platforms that move fastest will likely dominate this new market. And that's exactly why this upgrade from Polymarket matters. All right, so diving into more crypto news, we do have another story that just happened, and this is not just crypto. This is very much geopolitics, geopolitical money, and control of the global financial system. Russia is now trying to build its own cross-border payment system using crypto instead of banks or SWIFT. The system is called A7 and is backed by a Russian bank linked to the defense sector. The goal is quite simple, which is to move money outside the Western financial system. And why this is happening, like after the Ukrainian war, Russia was hit with heavy sanctions and got cut off from the global finance. And now they are trying to basically build their own financial rails from scratch. This is not optional for them. This is about economic survival. Now, here's where it gets interesting. Russia is expanding the system into Africa. So there are countries like Nigeria have already been mentioned as participant. Russia is also hiring and setting up operation in places like Togo, which is a country in West Africa. So the strategy becomes very clear. If you cannot access the global system, you build a new one and bring partners into it. Russia officials are being very direct, like they say this is about moving away from the USD. Russia claims around 84% of its trade with Africa is already done in rubles, their local currency. So this is not just about payments. This is about reducing dependence on the dollar system. If this works, if de-dollarization works, it could slowly change how global trade is settled. So in theory, countries can continue trading even under sanctions. However, let's step back for a second because the reality looks very different on ground. Reports show that the actual adoption is very limited. Local crypto professionals in Africa say they have barely heard of this platform at all, like this A7. Researchers say there is very little real activity and very small digital footprint, and some of the biggest claims cannot be independently verified. So, what we are actually looking at is not a global system, but an early stage experiment. This is a system built for geopolitical survival, not for mass adoption, because building a payment system is one thing, but getting people to trust is much harder stuff. Now, if we zoom out, because even if this project is small, the trend is becoming very real. More countries are asking what happens if they get cut off from the dollar system. And the answer is that they try to build alternatives. We are seeing this with China pushing with the digital yuan, Russia pushing the ruble, and now crypto entering the conversation. So this is not just about like one platform. This is about a global shift in how money moves. The world is slowly moving from one dominant financial system into multiple competing systems. Crypto is starting to play a role in that transition, but the biggest barrier right now is still trust, because finance runs on confidence, and that's something that cannot be rebuilt overnight, and that's why we're paying attention here on Roxham TV. All right, so let's shift gears a little bit. I do want to talk about Bitcoin because something very interesting just happened, and this podcast actually got released on 6th of April and is definitely making a lot of noise in the Bitcoin community. So this person is like Steve Keen. So he just went on the Diary of a CEO, which is a really famous podcast on YouTube and on different platforms as well. And basically, he said he believes Bitcoin is going to zero. Like he did not hedge, he did not soften. He said it directly. Bitcoin is going to zero. Um, so this person is actually not a random voice online. He is an Australian economist and the author of Debunking Economics. He is also known for criticizing traditional financial system, and this interview was on a very large platform with millions of viewers. So for the views right now, well, gosh, just posted like 2 days ago, and now we got 2.8 million views on YouTube only. Like it's not counting Spotify. So this message is reaching a global audience. Now, here's his core argument. What he said during this like a very long interview. Like if you guys are intrigued, you could totally check that out on YouTube. But what he says is that Bitcoin's biggest problem is energy use. He believes the network consumes too much energy to function, and his view is that in the future, society will be forced to cut energy consumption. So based on that, he concludes Bitcoin cannot survive. He even grouped crypto together with things like international travel as activities that could be reduced or eliminated. Now, let's break this down because this is where things get interesting. Bitcoin's energy use is not a flaw. It's actually the foundation of its security. That energy is what makes the network extremely difficult to attack or manipulate. It connects digital money to the real physical world. So the real question is not how much energy Bitcoin uses. The real question is what that energy is actually doing. And in Bitcoin's case, it's securing a system with no central authority. Now, if we zoom out for a sec, no country in history has become wealthy by using less energy. Every advanced economy increases energy consumption as it grew. More energy has always meant more productivity, more industry, and higher living standards. So the idea that we can reduce energy and still grow economically is not something history really supports. And here's another key issue. This argument relies heavily on climate perspectives, but energy systems are more complex than that. Energy economics, like grid stability and power infrastructure, they are very different fields. And in reality, Bitcoin mining is already evolving. It is increasingly using excessive energy, stranded energy, and energy that would otherwise be wasted. In some cases, it even helps stabilize power grids by adjusting demand. That part of that story is often missing from the mainstream narrative. Now, let's be honest about like what's also happening here. A lot of these strong anti-Bitcoin views come from people who never got into Bitcoin early, and now they're trying to explain why it must fail. because it's much easier to reject something than to admit you missed it. So why you should care about this, basically? Some old guy talking shit about Bitcoin, because this is still how mainstream narrative talk at scale, I would say. Large platforms are still pushing outdated ideas about Bitcoin and energy, and millions of people are listening to this, 2.8 million views on YouTube alone. So this is not just a debate about Bitcoin. This is a debate about how money works and how energy powers the system. If you understand Bitcoin's incentives and its role in the energy system, you're already ahead of the narrative. And more importantly, you're ahead of where the system itself might be heading to. And that's why we're watching very closely here on Roxham TV. All right, so that would conclude today's shows. But before you go, make sure to give us a follow on Twitter. So my Twitter is jamjamcrypto_io. Make sure to follow Roxham TV on Twitter as well. It's really easy. So at Roxham TV. So we have a global news coming out on an hourly basis about geopolitics, about AI, about Bitcoin as well, and some clips of the interview that you don't want to miss. So point being, make sure to give us a follow. If you haven't already, make sure to subscribe to the channel. So both Champion Crypto YouTube channel and Roxham TV YouTube channel. I'm here live Monday through Friday at 3 a.m. Eastern Time. If you don't manage to catch my show live, don't worry, the recorded version is also available on both channels. So thank you guys for watching, and see you guys tomorrow at the same time.